Yo. Yo, welcome to Carter's Corner Pocket, where we feel the rocket. Today, I'm talking GameStop. How's everybody doing? GameStop right now, killing it, $30.52, up 2.42%. What's SPY doing? I've been watching the market in and out. I've been working today. I'm working remotely right now. So busy lately. Work, like the type of busy, like last night I had some stuff to do because I had stuff with my job, time difference in Switzerland, different stuff like that. So I had to get stuff out at midnight so people in Switzerland saw it like right in the morning because of the time difference. Been so busy. I tried to log on. I was going to go live last night. I tried to log on last night, take care of my work. Then I was going to go live. God damn. I've got a football player running around. But yeah. So trying to go live. I logged in. My computer's like all glitching, like little black bars all over the place. I couldn't do it. So I had to drive all the way to work. I finished my work at like midnight. DC, came home. Now I'm working remotely, doing the damn thing. I cut my hair 2 days ago. My son's hair, all types of stuff. All types of stuff that's not related to GameStop, but just my life. The reason why I'm not streaming. I went fishing, right? We did all types of stuff. But yeah, I'm still here. GameStop's still here. We're gonna be here for a while. Who knows? I'm excited for the shareholders meeting. See what comes out of that. I don't know. Ryan can be quiet. He doesn't even have to say anything. Again, he can just business as usual, you know? So Ryan spoke recently, and I mean, like, everybody's seen it multiple times. I can play it again. See, right now, in like 40 minutes, I gotta leave, take my son to an allergist appointment. So really, I'm crunched with time. Really crunched with time. But then all of that, I try to keep my relationship good with my wife, you know, because it gets hectic, tied up. See, and this is why I'm going to cut my stream short and not finish all the stuff. But let's get into it. U.S. not looking so good. I don't care what the market says. I don't care if SPY's up, Russell 2000 is up 1%, whatever. Nasdaq's up 1%. GameStop's up 2.45%, 30.53. I think Max Payne, let me check it, is 29.50. And as you know, they want it right under Max Payne so they can get the maximum amount of money, have the maximum amount of call options out of the money, and puts, whatever, they collect everything, and then they probably flip it into shares, and then that's how they get their shares. But there's many more things. There's been a lot of talks about synthetic shares, people being so, like, pinpointing swaps of people. I doubt that's happening. I doubt that's happening. You don't have to take it from my word, but go try and do some research on some swaps. See how convoluted it is, see how hidden all the names are. So yeah, it's pretty difficult to do that, and even regulators don't even have that information. So let's go along with it. Yeah, so the U.S. dollar basically, being a safe haven currency during periods of market stress, it's eroding. And why is it eroding? Where is it eroding? It's all the tariff wars. It's all the stuff in the background, the financial markets, commercial real estate. Has been an issue for a long time. Savings and loan crisis in the 80s, commercial real estate was an issue. And now it's still an issue today. The issues that we dealt with back then in the 80s was being dealt with in 2008, in the dot-com bubble, 2008, global financial crisis, and now it's just being pushed onto us now during COVID and all of that. So what's going on? Oh, shoot. I never saw this. NASDAQ, what chart am I on? Daily chart. Bearish divergence over here. You can see right here. And this generally plays out. So we'll see how it goes. I'm not making a prediction or anything like that. Yeah, I'm not making a prediction. I'm not here for prediction. The only prediction I can tell you is GameStop will be massively undervalued and will be like way higher than it is 1 year from now, 2 years from now, 3 years from now, 4 years from now. That's why I invest. You don't have to invest. None of this is financial advice, but GameStop is a fundamentally sound company that the media drastically underestimates or purposely does not put out information. But recently, I'm not going to play it on this stream. I saw a few interviews where they're dropping some hints, little subtle hints, like, oh, GameStop, you know, this is good about GameStop. This is good. Look at their cash position. Look at this. Oh, they bought Bitcoin. You know, people that are bullish on Bitcoin are bullish on GameStop. The Bitcoiners think that GameStop needs Bitcoin to save us. That's absolutely like, that's the case, yo, just get to stepping. You know, I don't need Bitcoin. We can just move on with GameStop. But Ryan chose to do it, It's all good. Like I get Bitcoin's thesis, all of that, but I love the way Ryan Cohen just did 500 million. I don't know if it's testing the waters, see how it goes. Maybe he wants to stagger his buys. I mean, dollar cost average. Who knows what he's going to do with that 1.5 billion? But it's up to him. He can give the money back. 0% interest. We are not MicroStrategy. I do not want to be associated with Michael Saylor, anything like that business model. Taking investors' money, just dumping it into Bitcoin, dumping it into Bitcoin. If you're full on Bitcoin, you're gonna you would love it. But really, what's really happening with Bitcoin flows is people are getting out of MicroStrategy and moving to a more, I wouldn't say more secure, like larger, more mainstream Bitcoin ETF from like BlackRock or something along those lines. That's what people are going to start doing. It's already been happening. They're not going to report it to you. You got to go look for it. I don't have the information right here, but I know that's happening. I mean, maybe for the next live stream. Like, it was either do this now or don't live stream at all. So I'd rather just do this now, get through whatever I need to get through, what I can get through, and we'll see where we end up at. Yeah, but GameStop right now, we are over max pain. 2950 is max pain. So don't be too surprised if they bring it back down. I'm not seeing any type of bearish divergence in GameStop at this chart. But like, look at this chart right here on the daily. We broke out of this pennant right here. And we came down. And are we retapping and then taking off back up to this line over here, to this resistance line of 35? Previously, I said I think we're going to 35, and then we're going to 48-ish, 48, around that area. We can still happen. It's funny to me how we broke out right here on this thing that I drew. That's absolutely accurate. I think I'm gonna be honest. I think I only shifted it like from here to like here. But I mean, that's not a big shift. And I'm honest. I'm telling the truth. I have nothing to worry about. I have nothing to worry about if I'm wrong. And I happen to be right on this little pop. But let's see what happens, right? Something else I noticed on the chart, on the daily, I saw a channel forming over here. You can see it. Should have done this better. Hold up. This white line, yellow line. I want it to be an orange line. Okay. This orange line over here. You can see, I see a channel forming over here. I was trying to see over here where it connects. It may be over here on this closing bar on the initial run up in May when Roaring Kitty came back, when we were already up like 70-80% by ourselves without Roaring Kitty. Not to slight him, but just to let y'all know, they love to act like Ryan Cohen doesn't do anything and GameStop has no fundamental thesis behind it or strength behind it, which that's all it's about. But it closed on this bar, and always, I'm gonna let you know whenever there's pop-offs like this that just go like crazy whack volatile. They can't keep it under control. So the initial run up, to me, this is my eyes, my thoughts. Like, it's hard for them to keep it in control into this channel. I feel like it breaks out, goes nuts. They bring it back down, tries to break out, come back down. It's like a rubber band. When you let go, it bounces all the way back, and it slowly gets back to center, back to balance. So basically, that's what happens. It breaks out, comes back, gets back to balance, and then we're in this channel right over here, this orange channel designated by these orange lines. That's just what I'm looking. Doesn't mean we're in a channel, but that's just what I'm seeing right now. Just for fun, I'm gonna delete it because who cares, right? Over here, what do we have? I'm seeing us in a pennant still, and this is the breakout. Did we retouch it, and are we gonna break out upwards again? And let's see if we break past this 35-ish line. We were at 35, or just surpassing. The main thing I want to look at is surpass the previous rejection point. So we did that over here, and are we going to do it over here? Because this is a resistance line right here. And I'm sure if you go through it, you can see many different points of resistance over here hovering around this area and this line. But yeah, as far as synthetic shares, I believe they exist, but they have many different avenues. They invent avenues to hide the reporting of it. And how do they do that? Let's see. Let's take a look. Let me go down. Let me get on with the show. Yeah, I got my boy over here. Right here. Talking on the screen. He's got I'm waiting for my Jaden Daniels cards. No, he talked to me. He sent me a message, and I'm not gonna get into it. Maybe he said it. I'll go back and rewatch his stream. I've been busy, as I've stated before. But let's see. Okay, so we got Max Payne 2950. Before I move on of how synthetic shares could be a possibility, could still be a possibility without it reporting and hitting the short interest and all of that. The way GameStop was over 100% short interest. And the key is family offices. But what do I see? I want to be bullish on GameStop. I want to say we're hitting 35. I want to say we're hitting 50. GameStop typically fills the gaps. That does not mean it has to. It could be a catastrophic event for them, our annual shareholders meeting, depending on what Ryan says, or he says nothing, and just business as usual. What do I expect? What do I expect? Being in this stock as a long-term shareholder, like my prospect of this stock and my investment is long-term. I'm talking 20 plus years. First, I'm gonna take it a decade at a time, one economic cycle at a time. That's how I'm doing it. All right, cool. 312. Yeah. So let's see. Yeah, that's how I'm doing it. 10 years at a time, one economic cycle at a time. Um, and I'm solely invested in the GameStop, one company only. I found the company, I found the investment, I have found the management, the board of directors, and the CEO. I do my research on the stock, so I'm very comfortable putting my money into that. And I'm gonna play a clip from Warren Buffett if I ever get around to it. If I ever get around to it, let's go. Okay, so let me wrap. I'm like all over the place. All right, cool. Fed fear. I'm not paying for this. Financial Times. Fed feared loss of haven status would hit U.S. economy. Okay, so U.S. currency as a safe haven during periods of market stress, it is eroding. In 2025, U.S. Treasuries, the dollar, and the equities have sold off together 2 times as many times that's occurred during the entire previous decade. So that is crazy. All the sentiment, all the money, the safe haven money, where people dub as their safe haven money, it's flowing to the yen, the Swiss franc, and the euro. So that's funny to me because we already know we have history with Switzerland, right? Credit Suisse, right? UBS, okay, and then the yen as well. We have history with that, with the yen carry trade. So dollar is declining as far as the world viewing us as a safe haven currency. What are the threats? Full fledged tariff war. That's on the forefront. We have stagflation on the forefront because if the tariff war comes, inflation could rise. And why would it rise? The rise in the 30-year long-term Treasury bond, like that is the absolute safe haven of the market, right? It's testing market confidence. It could put upward pressure on inflation, on interest rates. Sorry. Why am I apologizing? I don't even apologize to anybody. Shit. Upward upward pressure on interest rates. I don't even know who's on the chat. But if you're in the chat, man, haters too, whatever it may be. Thank you. Welcome. Bring your knowledge to me, man. I'll bring my knowledge to you. Whatever I can do, whatever my research can do. All of this stuff for the macroeconomic landscape of what's going on in the world, where the money's flowing. Normally, I have articles and stuff to back it up, but like I said, man, it's either do research, pull up the articles, or don't, and then don't stream, or just go live and stream. So that's what I'm doing. So yeah, there's that. There's stagflation. That's really the biggest threat, right? And if there's upward pressure on interest rates, and you can tell, like the rise in the long term 30-year bond is above 5% for the U.S. That's crazy. So yeah, upward pressure on interest rates, and that could end up destabilizing financial markets. And when it destabilizes financial markets, we go up. Know what I'm saying? Exactly. Right. So yeah. So where we at? All right. Cool. Just to see like where's the money going? Synthetic shorts. I want to play this clip from back in the day about Archegos. It's just a good reminder of how crooked they are.
How does a firm amass such big positions synthetically? And I'll give you an extra order of tater tots if you throw in contracts for difference and/or total return swaps into your answer.
Well, when I was at CNBC, they taught us not to overcomplicate things on the air. So I'll just say the concept here was that Archegos wanted to take some of these large positions, but they, I guess, because we haven't spoken to them, wanted the anonymity of a swap, like a total return swap might be one example of the trade we're talking about. And effectively what would happen is the prime brokers, the banks that lent money to Archegos, would go out and buy shares of the stocks that Archegos wanted to be long. So Viacom CBS, a great example. If you look at the most recent 13F filings, you find that a lot of these banks seem to have amassed larger positions than whatever they had going into the quarter in Viacom CBS. So you see a lot of buying activity by Nomura, by Goldman Sachs, by Morgan Stanley, and others. And that was actually a tell for those that followed the stock that probably there was a big money man.
Archegos, Nomura, sorry. Why am I saying sorry? No. Okay, Archegos, Nomura, Goldman Sachs, and Morgan Stanley. Okay, so I know Goldman Sachs has gotten out. They're the ones that were like, when they made a plan. So this is what they did, for real. They made a plan together to unwind out of this position, or in an orderly fashion. How do you think they would do it in an orderly fashion? Little market blips over time, and then GameStop, like kind of like this, maybe, kind of like this, managed events, managed pop-offs, like this. This was out of control, absolutely out of control. Come down, pop it up again, come down again, pop it up again. Is that the 3 thumps that Roaring Kitty said in his tweet? I don't care. I focus on the words that he says, factual stuff, GameStop fundamentals, because really that's all we have control over. That's all our eyes have visuals on. So that's what we should do. That's what we should do. I love living life. Some things, basic principles of life, I always say that, and why GameStop will be successful. We're going so far towards AI, everything. Kids are going to be idiots because they just make AI think for them. They don't use it as a tool. We're the greatest generation ever because we were pre-internet, during the implementation of the internet, and then post-internet, but like current times internet, the one that Gary Gensler uses to beat off that internet, while getting paid, So that's family office owner of Annabelle Lee, Gary Gensler, getting paid, beaten off, wife dying, all types of stuff, supermodel wife dying. He's just gonna end up working for private equity. That's the deal. That's all he wants to do in the SEC. That's why nothing amounted from it. But let's move on. I'll go on off all these stupid things. But let's see, where was I at? So I did all of that, macro econ. Okay, we were talking about Archegos. Okay, yeah, so Goldman Sachs unwound. Yeah, these pops, they're probably planned. I don't know. Or are they out of control? Like, I don't know. It's just thinking about it. But Goldman Sachs, they had a kind of a treaty to unwind out of this position in a what? How can I say it? I don't want to say it. In an orderly fashion, I guess you could say. And unwind out of this. That was a long pause. My brain was like. But but anyways, yeah. So unwind out of it in an orderly fashion. So what? Goldman Sachs was like, "F it, I'm unwinding." They got out, right? So maybe who knows? Maybe they have a small position. I'm not even gonna worry about it or try to see what their position is. And that's the greatest thing about this investment. Why I invest all of my money. Like you could say, "Oh, go buy SPY. Here's $1,000. Go buy SPY." Why? I would put it straight into GameStop. Biggest value that I can see. Greatest thing. Like I found my one stock. That's what I have to say. Oh snap. Yeah, I found my one stock. So here you go. So yeah, Goldman Sachs just is like, F this. This is no orderly, I'm getting out. And that's probably why this spike is like going down like so crazy, the initial one of January 2028. On the initial run up. But yeah, where am I at?
Manager or two out there that was building up a position through swaps, because unlikely that those banks would buy such large volume just for themselves. So for Archegos, they would get essentially, as Leslie said, the economic exposure to the stock through this arrangement they had made individually and bilaterally with each of these banks. But they would not have to own it. And importantly, they would not have to disclose it. And if you think back to the GameStop situation, the beginning of that, right? What got Melvin Capital into trouble, I guess, is that they had to report ownership of put options, which effectively told the market, were massively short these stocks. Normally, you would not have to report a short position, with a few exceptions, like in the UK. And that was a similar case here. The market didn't exactly know who was doing this or why. And when the move happened, it was large and shocking.
It was. And Leslie, listen, Kate won't do it, but I will. I'm going to say something that our management won't like. So if any of our bosses are listening, mute the volume. Every quarter, we talk about these 13 Fs. We call it whale watching. We look at, the big funds, SEC filings on what they hold. I'm not saying they're not worth looking at, but here's the reality of the modern Wall Street. A lot of those positions might be fake positions or dummy positions to mask trades that are exactly the opposite, i.e., you own some of the actual equity, but you are synthetically short other positions through these TRSs, total return swaps, or what I mentioned earlier, contracts for differences, which are swaps, ways to bet against things synthetically. You don't own anything. You're betting on a move. You can be paid up front. By the way, those are illegal in the United States, but they're very profitable, or they used to be, in Europe and parts of Asia. But
And repurchase agreements, repos.
the point is, don't always believe what you see on the filing, correct, Leslie? Because there may be a different, bigger bet going the other way.
Okay, so where is that bigger bet? Gary Gensler? Let me know. I mean, it's in family offices. I can tell you that right now. I can't tell you that right now. But, yo, Mind Games, what's up? Thank you for showing up. Dope show. Up and to the right, Bulgarian brother, Ricky B. Loco. What's going down, bro? Hope everything's good with you. But, yeah, I think it's family offices. That's what I'm thinking. Because they're not tracked at all, It's self-reported. People like Gary Gensler have Annabelle Lee's family office. Like, if you look at this family trust, Annabelle Lee is his number one investment outside of the U.S. government. Over here is family investment, family office. And over here, let me see. Okay. What was I doing over here? Okay, Annabelle Lee. So he had, my bad. He had all of his investments over here. Now it's only one. When he took the SEC position, he was actually a chair. He was a chair member. Of course, he's a chair member. I think family offices have to have 7 chair members, 7 board members, and 4 of them are part of the family. 3 are not. It could be more, I think, but that's the minimum requirement. So the family has voting power, voting rights over the company. So Annabelle Lee is named after Gary Gensler's 3 daughters. I can't remember, Anna something, Isabel, and something else. But whatever. What's the point, right? Gary Gensler, SEC, sold off all his other positions, kept his one investment in this, got off the chair when he became SEC, the SEC chair. So yeah, he has a family office as well, and people can divert money through him, pay him through family offices, from one family office to his family office for favors, and it does not have to be reported. So what am I doing over here? Okay. These are rules for family offices. Look at this. Projected reporting, record keeping, and other compliance requirements. Rule 202A 11G-1 imposes no reporting, record keeping, or other compliance requirements. Crazy, right? And we're talking about trillions. These are trillions of dollars that family offices are worth. I think $10 trillion, probably more now. Yeah, is this saying average net worth of 517 million or something? I don't know. Now it's like billions, and family offices are at like over $10 trillion in this world. So yeah, so that they don't have to report at all. And who knows? Like the guy said, the positions probably don't even have to be reported. And here's Gary Gensler, little rat face, you know what? And his wife, supermodel over here, dead. This fool over here. Who knows what's going down with him? I don't know, but let me keep playing this.
Yeah.
What's up, Pushing?
It's not something that hedge funds are new to. They have had to file 13Fs for, I think, decades at this point. And so they've figured out what happens when you disclose a certain type of position, a certain size of position. People catch on to it. They see what you're doing. So they found creative ways to not have to disclose exactly how they're positioned, to leave them to certain vulnerabilities, as Kate mentioned, like Melvin found itself with regard to GameStop, for example. Now, I do wonder, if we kind of look at the post-mortem of Archegos Capital and some of the potential impacts from it, will the SEC be looking at rules regarding disclosure, transparency, things of that nature? This is a family office. It's not a hedge fund. And so their disclosure requirements are even, less transparent. And so all of those things, I think, are important considerations as we kind of take a step back and look at what has happened over the last few days.
Yeah, and talking to people on the street about it, Kate, I mean, one thing.
And let me skip forward real quick.
You know, Leslie, and here's the thing about Goldman Sachs and Bill Wong is that he got in trouble, had some SEC issues related to Hong Kong listed stocks. I think that was 2012. Gosh, it's almost 10 years ago. Anyway, he was kind of banished by Goldman Sachs, right? They're like, well, we're not going to do business with you. At some point in the last few years, somebody let him back in, right? Some sales traders like, boss, please, he's a big money, he's safe, I'm sure. They brought him back in, and now this. I mean, this was sort of a round trip for Bill Wong and Goldman Sachs.
Yeah, it just goes to show you what the prospect of significant fees can do for your reputation. But no, you're right. It has been reported that, he did not pass muster with Goldman Sachs' reputational committee. However, he did have agreements all over the street. We know of at least 6 prime brokers that he was dealing with. And you bring up kind of the who gets ahead here with regard to those prime brokers. The FT actually published an article overnight looking at how the main prime brokers that he was dealing with actually met last week and had a conversation about how to orderly unwind the trades and make sure that everything was done in an orderly fashion. And then certain firms broke ranks, they sold earlier. Of course, it's kind of like a prisoner's dilemma kind of situation there. With regard to just the psychology of banding together as a team versus kind of going rogue for your own benefit. So really interesting behind the scenes stuff going on.
There's also a domino effect
really
that occurs here, right?
Yeah, go ahead.
No, sorry to interrupt. I was just going to say there's a domino effect that occurs when, as Leslie noted, some broke ranks. So you had kind of Thursday night to Friday morning, 2 key prime brokers in Credit Suisse and Morgan Stanley declaring Archegos in default. And that actually triggered a technical aspect of the prime brokerage contracts with others that allowed them to default Archegos as well. And that's when the asset seizure and the massive sales began.
Oh yeah, Bill Huang's allowed to commit felonies, do whatever, and then go have conversations with prime brokers. All types of different people get jobs again. But if I had an illegal cockfighting ring, that's a felony. I couldn't. No Tony De Niro. I couldn't get a job anywhere else. Illegal cockfighting ring's a felony. If I got two cocks, started fighting them, it's a felony. That's crazy. I couldn't get a job. I'd probably get fired. I couldn't get any other job. Denied. I have to explain it on my resume, but Bill Huang can go around, whatever, go around throwing around billions of dollars all over the place, recklessly, and nothing amounts. So now finally he's in jail, but who knows what's going to happen in the end, right? So there's that. And then what else is, why are things like the hedge to GameStop? Listen.
Discovery, and no offense to them, not exactly high-powered stocks. I have said that Tesla is the most important stock in the world. And I don't say that because the stock's been on fire or I like the cars. I say that because when you look at the sort of dark underbelly of derivatives, ask any trader out there on swaps and derivative desk. So much is tied to Tesla or a few other big technology names. I think the bigger story here may be what's the bigger risk on bigger names and how many derivatives and swaps and synthetic positions are placed on things we have no idea about.
This is wild. This guy is just letting everything out, right? He's letting everything out, the playbook out. Not like playbook, but like he's talking about stuff he should not be talking about.
Right. And of course, the reason that market participants like to use these complex products like swaps is to give them some anonymity. And with that comes the nimbleness to be able to get in and out of positions without moving stocks as much as you would if your position were public. That said, it's interesting you bring up Viacom CBS not being exactly a power stock. I did some reporting on that name yesterday because I wanted to understand what the fundamentals were. And one analyst I spoke to said, it's so interesting. What we noted in the analyst community who follow these media stocks is not so much the fall of that price of that stock last week, but the rise. There were no fundamentals to support a price that was pushing $100. There was this offering in the market that you mentioned. It was new equity and also some convertible bonds. And the management team essentially thought, let's take advantage of this high flying price. Let's raise some capital for some of our longer term plans. And that was fine to do, but it seemed that the market didn't like it. They weren't able to raise quite as much as they expected. They ended up at about 2.65 billion, not 3. And somewhere.
Okay. Anyways, the guy said what other positions? He said Tesla is the most important because what the large stocks? What other positions do they have these synthetic derivatives contracts for? Like, what are they doing? What are they doing? Are there like synthetic positions on Nvidia, Tesla? Is that why Nvidia has to constantly go up because it's the opposite of GameStop? They used it to hedge GameStop, their GameStop position that they're hiding. Could be. Very well could be, because it's so unnatural to see the market tumble a little, keep going on an upward path in such an uncertain time, We've got tariff wars, we've got geopolitical tensions, countries splitting up into sections of the world, just trading within and operating in their little bubble over there. Not an interconnectedness. All of that's gonna go down. Inflation's all up, all off the charts. Just everything is so uncertain. The dollar is not a safe haven currency of the world. It is nuts and wild, but the market just keeps going up. Why? Why? There's going to be a point where the shorts, where institutional investors, the stock has to turn around. And now, when you look at it on the long term, I think we're at that point. I really feel like we're at that point. Look at this all-time chart, looking good, right? Looking really good. So yeah, it's Ryan chilling. But yeah, 5-year chart, the weekly chart, still on an upward trend. We have Doritos triangles inside of triangles, and still on an upward trend. Well, and the biggest thing was like, weren't we up 10% when the entire market was like blood red? I love it. That tells me everything I need to know about GameStop. This is why they probably have synthetic derivatives positions, just specifically hedging the GameStop position, put out there to hedge that position. So we'll see. This is why it's really, you heard them say they don't have to report it. They don't have to report the swaps. They hide their positions. So what's the point in going and digging if financial regulators don't even have it, or financial regulators are paid off by these people? Do I even need to play this? I gotta bounce in like a few minutes, but see, I didn't even get to my stuff. But let's see. Just another article, telling you GameStop's failing brick and mortar. It's not loading. Failing brick and mortar company. I saw a video recently. I'll pull it. I'll do another video maybe, and then have those videos in it. The lady was saying, she started off by like, failing brick and mortar company GameStop bought Bitcoin. It's like, I'm happy with the way Ryan Cohen did this whole Bitcoin transaction. Why are people hating on us? Is it not responsible to only use 9%? Is it 8%? 8% of our cash position to invest in GameStop? Do people not tell us to diversify? Right? But everybody gets all mad. It's only 8% of our position. I know the Bitcoiners wanted us to buy 3 billion of Bitcoin. How about 6 billion? No, that's not Ryan Cohen. If you do your research, it's not going to be him. Why you saw Larry Chang's tweet? He said, you get a large sum of money, and you should apply this to yourself if you can. Get a large sum of money, sit on it for a year, and that gives you clarity. Like, if I ever get money, I'm going to continue my job. I'm going to continue my lifestyle. I'm going to continue my my whole world, because this is my life. I'm going to be here. I'm never going to change. I hope not. But who knows? We'll see when we get there, right? But my intent is to continue working, continue being active, because if you do not, you will die, because you get all these aches and pains. Man, if I had like back pain the other day, I just keep on going with my own damn life. I never have it debilitate me, because mentally I'm strong, and I can push through anything. I walked around on a broken foot for like 6 months, 7 months, and my wife was like, "You're crazy. Go see a doctor." I'm like, all right, fine. Ended up reconstructive ankle surgery. But when I had a newborn baby, my first daughter, 6 months, what did I do? Push through it, walk through it. Man, I was back on morphine and crutches, at my desk, and they were like, "Go home." I was like, all right, cool. I'm gonna drive home. I was like, they're like, "Are you okay, man?" I'm like, "Yeah, I'm out. I'm gonna go work from home." They're like, just take leave. I'm like, all right, cool. I'm out. But yeah, I'm there for, I've experienced pain. This is there's no amount of pain they can bring me to this stock. What do I expect coming up? I'm going to save the rest of the videos probably for another one, because I got to bounce. I want to listen to a song. What's pain, man? This is no pain. This is just numbers and little lines on a screen. That's nothing. I got the real world in front of me out there, and I'm going to go out there right now. And yeah, I don't know where I'm going with this, but that's what it is, man. They can't break me. None of this can break me. None of this hurts with the amount of hurt that probably you and I can speak for myself, have gone through in our regular lives. This shit is nothing, man. They got no game on me, man. Can't fade me. But GameStop right now, $30.54, 2.48%. I do see a pullback coming, but it doesn't have to. Like I said, all these gaps. Where do I see the pullback? I'm going to just tell you where I see the gaps. I think 28, just above 28.55. I see a gap created, but we also have, I guess, a couple gaps to the upside. Um, that's actually, I would say that got filled right there. So yeah, um, how can how can I be bearish, right? Talking about downside risks or gaps and stuff when GameStop's up 2.5%. But where do I see the gaps? I'm gonna show you real quick. There's a gap right here, 29.50. But I'm gonna just look for the lowest gap right now that I see, which is right over here. My bad. I'm probably giving someone an epileptic seizure. All this flashing and stuff, probably cracking my computer's motherboard because it's overloaded. But yeah, like right over here. Let's see. Right over here, gap 28.53, I would say. And then right around here, 28.69. So let's say we pull back to 28.50, you know? Because I can definitely see them pulling this back before earnings this week. This week. So this week, next week, whatever. But you know what? It doesn't have to. And you know why it doesn't have to? Catastrophic event for them, a catalyst, something Ryan Cohen announces. In my eyes, he doesn't have to say a word. He spoke his thing at the Bitcoin thing. Maybe he can speak a little bit more, a little one-liner here and there, saying thank you. I'm as determined as we ever were. GameStop is in the best position it has been in years, decades. Our cash position is the highest it's ever been. We're a smooth running, efficient machine. Gross margins, I want to take a look at gross margins, net income, how that's going to do. I'll look at that, see what Q1 is going to be like. But to me, it doesn't matter. I love to just, it's all fun and games, analyzing, projecting, this and that. But I just like chilling back and letting the information come to me. That's why I didn't hop on. Like Ryan Cohen spoke. How big is that, right? And he spoke very well about GameStop. I love how he's like, GameStop was bad when I took it on. You know, I could have hopped on that day. Hey guys, Ryan Cohen is the catalyst. Blah 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 blah. Short squeeze. No, I don't need to do that, man. I'm gonna be here a long term investor. This stuff is not gonna change. GameStop, whether it be go to 40 tomorrow, all right, cool. You know, 40, 50, 60, 70, 80, 90, 100 is not for me. You know, 500, talk 1,000, talk 2,000, and I'm not crazy. You know, I can't wait to reference this video 10 years from now. But yeah. What am I going to play on the way out? So that's what I'm seeing. I see a 28.50 something gap. So maybe we'll get a pullback around there before earnings, because you know the way they like to do this stock before earnings. Yo, Michael V, what's up, man? Welcome. Glad you could make it. Dynamite's been holding it down. B-More's been holding it down. Morantz, you know, as usual, always holding it down. And the regional GameStop, I got to listen to the stream. I didn't catch too much of it. I have to listen to the stream today. I'm going to try to do that a little later, but I'm gonna be out. Let me play this real quick. Fuck you. Stop, won't stop.